So there's this bank out there, it is called SoFi. If you are interested in stocks or finance or fintech, or you have probably heard of SoFi because everybody talks about it as like the future of banking. In today's video, I wanted to take a look at SoFi, not the business, not the lending, not the banking, but I wanted to take a look at a component of SoFi's business called Galileo and Technesis. So Galileo is a company they bought in 2020, Technesis is a company they bought in 2022, and these are, if Galileo is to be successful, if it's to generate a great return on investment, in my eyes, it comes from Galileo and Technesis. So in today's video, I wanted to take a look at what Galileo even is, what it does. To get there, we got to look at what banking as a service and embedded finance are. So today's video is going to be a breakdown of banking as a service, of Galileo, and what these mean to the future of SoFi. I'm Ash Anderson, let's take a look at it. So to understand Galileo, we have to start with banking as a service. And banking as a service is, well, it's pretty much taking everything that you would typically do at a bank and doing that as a service, right? So what do you need? You need bank accounts. So Galileo allows, or banking as a service, we'll not focus on Galileo just yet, but banking as a service is a service that allows anybody to go ahead and set up bank accounts. It allows them to move money, so you can pay and send and receive and get paid in it, card issuance and management, KYC, which is very vital. So this is knowing who your customer is, PCI compliance, so when people swipe those cards, are they compliant? All that other compliance fun stuff. And then finally, risk, fraud, underwriting, all of that. So banking as a service takes all the complexities of a bank, creating the accounts, managing what money is in there, accepting payments, moving payments, issuing cards, not issuing cards, taking those cards back. People have lost their cards. It takes your KYC, your frauds, your PCI compliance. It takes everything that is very complex about running a bank, and it brings it all under one tool so that anybody can really use those functions and build their own banking products. And when I say anybody build their own banking products, this is what is the realm of embedded finance. So embedded finance is companies, or anyone really, just taking financial technologies like bank accounts, like debit cards, like credit cards, taking those financial technologies and embedding them in some other application. And so you've probably dealt with this in numerous different ways, right? If you use, I'm just going to pick on Robinhood. If you use Robinhood as an investment account, you might have noticed that they now do cash management. So they allow you to get a debit card and use the cash that's sat in your brokerage account as a regular bank account. That is actually backed by Galileo. And so that's the world of embedded finance, right? They've taken an application that already was financed to begin with in Robinhood, and they've now strapped on a bank component to it using a banking as a service provider like Galileo. I wanted to look at one other example because I think it's best, again, Excalibur, draw this out and really just think through it a little bit. Instacart, or a company like Uber Eats, or just anything that revolves around somebody else going and picking something up for you. These services actually use banking as a service, right? So Instacart works, if you've never used it, you get your app, you place an order for groceries. The shopper, so somebody that's going to go out there and actually buy the groceries, the shopper will look at your order and they'll accept it, right? They're like, I'm already at Walmart. Yes, I can pick up these items. They'll go ahead, they do all that shopping. Let's say it's $200 worth of stuff. Old way, no embedded finance, no Galileos, no Stripes, none of that stuff. They have to go to the checkout counter and pay $200 of their own money, but they don't have the money to pay. So that means they either now can't accept that order, or they have to figure out some way of funding it. They have to put their $200 at risk, and maybe the order gets cancelled before they actually deliver it. This could be a nightmare, right? And it really would make it so that Instacart is not a viable path for a lot of people to earn some side income or even full-time income. So how do we fix that? Well, instead of the shopper now saying, I don't have the money to pay for this order, so I can't accept it, Instacart actually goes ahead and issues cards. I don't believe Instacart uses Galileo, so this is just an example of embedded finance as a whole and how it could be used, but Galileo could support this. So what they could support is, instead of the shopper having to front the $200, Instacart uses a banking as a service issued debit cards. They issue all their shoppers a debit card. The very cool thing about this is that the debit card could only have that $200, or maybe you give it a little bit of buffer just in case something's not priced as Instacart expected. But the card allows for $210 because the shopper accepted this $200 order, and they accepted that order at Walmart, so the card will only work at Walmart, it will only work for $210 worth of stuff, and it will only work for the next 2-hour window. So that is safe now for Instacart. Obviously, you can't go out to GameStop and buy a games console with this money, because it will only work at Walmart. Yeah, they could go ahead and probably buy a games console at Walmart, but it really limits the scope of risk that Instacart has to go through with their shoppers, and it makes it so that the shopper themselves don't have to incur any risk of like finance and stuff like that. Banking as a service, I just put down here as they would typically collect revenue on the interchange and on the card issuance. So Instacart issues a card to somebody, maybe the banking as a service company charges $5 for that card issuance. That's how they make their money. And they'll also make money on the interchange. So every time that card gets swiped, there's a payments video out there on my channel. I'll try and link it in this video. But every time that card gets swiped, there's an interchange fee that takes place. It's very, very small amount of money. Let's say on a $100 transaction, it ends up being $1. Well, maybe Instacart's worked it out with their particular provider where they'll get 20 cents of that dollar and that provider gets the other 80 cents. This is all up to the business, all up to the banking as a service provider, but they will collect some money every swipe based on the amount that they're swiped for. And so that's banking as a service, that's embedded finance and sort of what that is. And Galileo is a provider of these services. So Galileo will work with the likes of Instacart to issue cards that just work in particular places and just get that job done. They will work with the likes of Robinhood, and Robinhood is actually a customer to build build cash management onto the side of their investing application. They work with a bank called Dave. Now, Dave is actually just a straight-up bank account. Like, it's not anything truly special. They've gone to market and they've said, hey, we can get you ACH transfers faster, early direct deposit, that sort of stuff. So that's been their market positioning. But Dave, as a bank, is built entirely on Galileo. So, Galileo does everything you would want a bank to do. It can either do it whole, like it does for Dave, or it could do it in pieces, like it does for Robinhood, or it could do it in even unique ways, like it might need to do for an Uber, a Lyft, a Instacart, an Uber Eats. Any of those businesses, they want to embed finance, they want to make it easier for their shoppers and their customers. You can build those things with Galileo. And so that's why when I started looking at SoFi, I wanted to make a video specifically about Galileo and how it makes money and what it does, because I think that that's probably the most unique part of the business, right? Lending is lending. SoFi lends money out. They do student loans, personal loans, home loans, but it's lending money. Everybody knows how lending money works. Everybody knows how a bank works. They have bank accounts. Everybody knows how a bank account works. They do all that stuff. Yes, they're a bank. Yes, they make most of their money from lending and bank products. But the big upstart, the thing that's likely to propel SoFi to a much bigger company in the future, is Galileo and is Technesis, which are the components that we've just spoke about. A note on Technesis and Galileo, I guess, is that they don't yet power SoFi as a bank. So SoFi bought these businesses, they don't yet power SoFi. But that's going to change next year when they start introducing Cyberbank Core, which is what Technesis built. So that will allow SoFi to start using Galileo and its offerings as to power their whole bank. So they'll really start dogfooding the product. And to close out this video, I did just want to talk about how Galileo actually makes money. We hinted at it with those interchange fees, but they do have a number of other ways as well. And yes, I drew it out so it's easier to look at. Let's take a look. So they've got account creation, active accounts. So sometimes they'll charge like 10 cents to create an account. Maybe they charge some people for having active accounts, replacement cards, ID verification. These are all maybe a couple of pennies each, but they are a couple of pennies each, right? So account activation, new cards, canceling accounts, canceling cards, reissuing cards, whether it be expired or a new one's requested because the old one was stolen. Statements, they charge for statements, monetary adjustments like, hey, the money's gone up or down in this account, we need to adjust it. Paper bill payments, so if somebody requests a paper bill be sent, I've seen invoices where they're at like 50, 60 cents, which is, just a crazy amount of money if people are doing that a lot. Early access via direct deposit, we spoke about Dave. Dave is entirely built on this feature right here, this feature that Galileo has. This is Dave. So if you wanted to build a competing Dave account, or a competing Dave bank, you could do it with this feature that Galileo offers. And other fees related to loads. Other stuff down here, IVR access, IVR balance requests. If you've placed a phone call before to a business, which obviously you have, and they're like, press 1 for English, press 2 to talk to the sales department. That's IVR access, they charge for that. Balance requests via IVR, like, hey, press 5 to get your balance. That's additional money that Galileo collects. OFAC screening, something that every bank has to do. They have to check, hey, is this person that has an account here at Galileo or at our partner bank, is this person allowed to have a bank account? Are they allowed to move money? That's a government requirement. Galileo charges for it. API changes, emboss file creations, ACH file creations. You get the point, right? There is a lot of stuff that Galileo does on behalf of its customers, and all of those things are line items on an invoice. So no matter what you do, if you build your bank or your financial tool on the back of Galileo, you're paying for every single action your customer takes. Are you paying a lot? No. These are like pennies at a time. But depending on how many pennies you've actually negotiated up front, depends on how big your bill is with Galileo at the end of that month. Most customers have like a minimum amount that gets billed. So, you might say, hey, we're going to try and build out this product. We'll pay you $20,000 a month minimum, $30,000, $40,000, maybe even $50,000. But we'll pay you a minimum amount, and these fees that we've just looked at go towards that minimum amount. And then, obviously, once you surpass it, if you surpass it, then instead of paying the $50,000 minimum, you pay $100,000. Some users that I've even seen out there will pay a portion of the balances that sit in the accounts. I'm not sure how common that is for Galileo to negotiate, or even for other businesses to negotiate, but some users do pay a balance on the accounts as well, which could add up to a lot of money for Galileo if they've started getting all their customers on that kind of plan, even if it is like a 100th of a percent. That soon adds up if you have millions of accounts out there, which this business does. 160 million accounts are active in Galileo as of SoFi's last reporting. So that's been a breakdown of Galileo. Obviously, I don't want to touch on whether SoFi is a worthy investment or not. I just wanted to talk about what Galileo is, what it does, and sort of the types of services it can provide. As I've said, this could be, or is, if SoFi is to become a massive business, this is what will take it there. But there are a lot of competitors that are doing very similar stuff, like Stripe. Stripe has a lot of competing products, card issuance, treasury, all that sort of fun stuff. There is Plaid, which handles a lot of similar stuff. Plaid founders built a competitor to Galileo as well called column.com if you want to check that out. Yeah, there's a lot of, I could go on naming a lot of different companies in the space that do either all of what Galileo does or at least some sliver of what Galileo does. And that's going to be the biggest risk that the business faces. But to me, seeing 160 million accounts active is definitely a step in the right direction. And seeing that new customers are choosing to build on Galileo each and every month or each and every quarter when SoFi actually release their earnings and talk about this, seeing that new customers are stepping in there and building new financial products is definitely a good sign. Yeah, thank you for watching. I hope you enjoyed the video. We will be doing more breakdowns of these financial companies and the tools and how they work. So please follow along, subscribe to the channel. Drop a comment if there's something you're wondering about, whether it be SoFi or a different business, and maybe we can answer that in a future video or take a look at how it works. Thank you for watching though. Hope you have a good one. I will see you next time.